Good morning. Welcome to Admiral Markets. My name is Chris, and together we're going to take a look here at the Forex trading, my own Forex trading, in fact, and look at the charts and markets on today, the 18th of November. Alrighty. First of all, though, this is a PowerPoint including these disclaimers explaining the fact that this material, this webinar, is intended for a global audience and may not be suitable for everyone. To find out more about that and the other details and conditions, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading is considered high risk and it may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice. It is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer, and you can request a copy through the admiralmarketsglobal.com website and contact an appropriate entity. So today's focus is going to be on Camarilla, if I remember correctly. At least that's what I have prepared, so I'll double check it though. But Camarilla, of course, is a pivot point indicator, and which we also will have on the charts. So we'll be using various techniques. The Camarilla will be the main decision-making point, but there will also be other things on the charts that you'll see. Moving averages, we'll use trend lines and fibs as well, but we'll place a bit more emphasis on the Camarilla. If there's any questions about what I'm saying or what I'm thinking about or doing, just let me know. If you're new in here also, please let me know, because it's always useful for me to know if there are any new webinar attendees by any chance. And otherwise, I assume that you've been here more often. And that's about it, I guess. So we can start looking quickly at the calendar to see if there's anything that could disturb perhaps our trading. If there's a very big event, for instance, that could happen. We have a pound CPI, for instance, 1 hour 43 minutes from now, and German ZEW, and in New York we have PPI. Tomorrow, of course, as you probably know, we have FOMC in the afternoon of New York. So that is always a biggie, and yeah, maybe not today, but tomorrow could certainly be impacted by that. Perhaps today, let's see. Alrighty, let's take a look at the euro dollar. First of all, euro dollar had a big fall yesterday. It opened up in the Asian session on Sunday, by Sunday at least, and it started to go higher. In fact, let me take a look where it started here. This candle right in here. So we moved up higher, actually some 80 pips, pretty strong move in the Asian session. Quite unusual Asian open to see the euro dollar move up 65 pips like that, but then also a big fall, a bigger fall even, and moved down 138. That was during yesterday's European session. Primarily part of it in the London and part of it in the New York. All right. So as you can see, also that most of the fall happens within a pretty short time. That we had a kind of a New York London gap where London goes to lunch, and then we had some fall after that. Now we're moving up again. How does this all piece together in the bigger time frame? I'm personally, if I look at the bigger how do you say it, bigger structure or bigger time frames, then I think it's pretty interesting short potential. Now I know that price is bouncing. If you look at the 4-hour chart, the price is bouncing off a support line, perhaps like this, and is moving up like it's in a channel. That is true. And therefore, yesterday's short, if you saw that big pin bar here, would have been perfect, in fact, because it was at a extreme. It was a short. Of course, there was a confirmation of price. But anyhow, anyone who didn't take that short or is in that short but would like to add on potentially, then I think that there's still a potential either now or upon the break of that support trend line. So what I'm looking for is, first of all, if the price breaks through the support line indeed, then I'm looking for a clear 4-hour candle below this trend line. What I mean with clear 4-hour candle is as follows, these two things. First of all, the candle close has to be near the low, not more than 40% off of the low, preferably within 25%. So I want to see the close indicating that the bears are in control within those 4 hours. Secondly, I want to see a trend line really pushing through, I want to see a candle pushing through that trend line, because if the candle is small and I'd say only half of it is outside of the trend line, that's not a clear breakout. I want to see the majority of the candle below the trend line, and I want to see at least a sizable candle, not something that is only, for instance here like this, only 18 pips. But preferably a candle like this one here. In fact, depending how you draw it, that could have been a breakout candle itself, actually, depending on whether you're trading in New York afternoon Friday. That was certainly a move that probably got many traders into a false break, to be honest. But the timing of the break was not all too good. That's why it's also important to look at timing elements, because if you're trading gold, for instance, right in front of New York close, well, it does make sense to aim for a breakout when there's only 1 hour left of trading, because no one's going to push the market. Now, maybe it was not that extreme on the euro dollar, but Fridays are always risky, so that was the only disadvantage of that. Otherwise, it was a pretty nice false breakout, in fact, here, and a big turnaround. So we got some kind of zigzag. Anyhow, point is that most of the time, a candle that, oh, by the way, the only thing we didn't have here was a majority of the candle outside of the trend line. So we did have a close near the low, but you see that even this candle, only a small part of that candle was really below it. So this one did not actually adhere to, did not subscribe, did not match those two things. So I want those two things on the 4-hour chart. I hope that's clear. Let me open my question box just in case. 1 second. It's, well, difficult to say if it's really too big or not. It is certainly sizable. Whether it's too big, probably not, to be honest. But even if it is, it's still a trend line. So whether it's a bear flag or a channel, if it breaks support, it still boils down to the same, I would say. If you put a fib on this last 4-hour swing high, swing low, price stopped at the 50 fib, which is the very max I would consider. I mean, of course, 38.2 fib is a better one for a bear flag. The 50, I would say, is the last one, the very, very last one. If it goes above the 50, it's certainly not a bear flag, without any doubt. This one is kind of a grayish area indeed, and has lasted long. Now, doesn't mean, though, that the break, I don't think, necessarily would be anything wrong with it, right? So in that regard, looking for that 4-hour candle below this trend line. If you look at the moving averages, we have the 89 still above the 21, so still bearish. We had actually a candle close below the 21 here on the 4-hour chart, and obviously we still have big momentum like this behind it, and this seems to be quite corrective. So that's one idea I have. The other idea is shorting it sooner, before the break happens. As price rides up and rises, one idea could be to trade the H4, for instance, or even the H3 here. Now, price is pushing through the H3 as we speak, so it might be better to be a bit more patient and see how far the push can go. And there are various ways how a trader can do it here. This really depends on personal preferences, because one could wait for the break and just skip all this. One could try to catch a sell here, and you could do that by shorting the H4 or the H3. One could wait, indeed, as Bob says, for the news event to wait to pass by in 2 hours and some minutes. So those are the options. In fact, it is a red tagged event, So it might be the best just to look at it on a 4-hour chart. Then we have that news event behind us. Indeed. Were it not for the news event, then I think these levels are good for shorting. There was a clear momentum here. What I like about it is that there was a momentum yesterday supporting that fall. I don't know how visible it is. 1 second. It's probably better. Okay. So if you put a fib on that, the 61.8 corresponds with the H4. That's probably a good one, 125.25. The stop loss would have to be above, well, it doesn't have to be, but I guess would be the best above H5 and the top at 125. Yeah, it could be 125.87, could be even 126.03, depends how spacious you want to go. With a target, I mean the main target will be 122.50. It's a pretty big space. That's the big target, a very wide one. That would be 275. Versus perhaps an 80 risk. So that could be about 3-to-1 R2R. Now, of course, the risk about shorting it at H4 is the news event. So, as Bob said, it might be better to wait after that. The risk of shorting it after the news event at the 61.8 is the fact that this could be a bounce. This is still, of course, it would be a short within an uptrend channel. That's the risk of not waiting for the break, because it could still be in this channel, stay in this channel. Yeah, I don't have a gap. No, because price first went up and then went down. So no, certainly no gap in this time around. Unless you're talking about some other spot of the chart. But I don't really keep a track on gaps. So there could be gaps somewhere, and I really don't keep a mental note of it, which pair has a gap at what price. That's why. Okay, yeah, or there's something wrong. Maybe you want to maybe refresh it. Click maybe here on refresh, and it could look different. So other ideas I had, by the way, besides the $0, the pound dollar I would definitely wait without really any doubts because of the news event. So I'm not going to really go into this that much, but all in all, it looks bearish to me, obviously, because of a big fall yesterday and Friday and Thursday, I guess. And so all in all, an H4 short could look good as well, but I mean, you have the news event, so that's not too very interesting for me. More interesting for me is the Aussie as well, and it's kind of the same idea as the euro. So then we'll move on to other types of setups, but the Aussie is also interesting because I think, well, obviously we're in a downtrend on the daily. We still don't have we might have a higher low, but we don't have a lower high. No, wait, other way around. So we don't have a higher high. We might have a higher low. Excuse me. This could still be a lower high. Anyhow, you see my point. This is down. This could be a hook back from we're down for the moment. So if we zoom into that part, you see that big correction, the fall, and this seems to be like a pretty choppy hook back. Now, it's certainly not a bear flag because it went up pretty high, went all the way past the 61.8 fib. I shorted it last week. Remember we talked about the Aussie short, in fact, last week, and I got some pips out of it, but not as many as I hoped it would. It was up about 80, I guess, Why? Because I took it at this pin bar. I missed my pending order by 5 pips on Wednesday. So then I decided to take it lower after seeing this pin bar. So I took it there with about a 30 pip risk, I think, or perhaps 40. But I was aiming, I think I was aiming for, I don't remember here, perhaps 86.20, and it went to 47. And I got taken out at, I don't know, only about 25 pips probably, because I had a trail stop loss that went up, went here, and I entered here, so there was not much profit, and I was aiming for here. So that was a pity, obviously, because I was aiming for plus 120, 120 pips. And yeah, it was a pity also that I didn't catch, of course, that the entry missed by 5 pips because there was a difference. I eventually had to take it about 28 pips lower, which took away some of that profit too, of course. So, but in any case, I think it still made sense to take it on the pin bar because obviously the pin bar was showing that my entry was probably not going to get hit. So I think it made sense to adjust that and be flexible and react to that price action candlestick pattern. If you didn't, there's no problem with that as well. But that was my idea, at least. So that was the trade of last week. Didn't go, unfortunately, as far as I hoped. I thought it would be a break. We didn't get the break. We got another bounce, in fact, and we're now in this channel. And that's the whole idea, in fact, for today, is that now I would like to see the break. Yesterday, too, was an interesting short, again, at the top of this channel, just like the one I mentioned on Wednesday. So same thing as the euro dollar. We'd like to see a full 4-hour candle below this support trend line. That's it, really. That's simple, I think. There's really nothing else to add. If you look at the daily chart, you can see the price was below the 21 EMA band, and we hooked back to it once, twice, 3, 4 times. Now, yesterday we had a bearish day, and you can see that we were not able to break the top of that band, which indicates to me that the daily chart is probably ready with that upside. But let's see. The 4-hour chart is flat. That's it, I guess. That's all I wanted to say. The euro dollar daily chart or 4-hour chart, by the way, quickly. No, daily chart, sorry. Daily chart. Is here, look at this bearish candle yesterday, right into the band as well. And if you look at the band, it's been obviously respected, hardly broken through, yeah, for a very long time. And the last time was, let's see, May. Price was above it. So this is probably a retracement back to the band. Especially the close below the band, I think, is a good signal. One of the reasons why I like the bearishness excuse me, for today. So that's the Aussie and Euro. They're quite similar, as I said. Then I have the pound yen in mind today. The pound yen is a bit funky. It had, I mean, especially on the daily, you would see that. Correction, very mild correction for the pound yen. Then a big up, down, and up. So that is quite dramatic. And yeah, from a chart pattern point of view, could it be a rising wedge? Could it be expanding wedge? I don't know, perhaps. But obviously, it's quite a revival of the pound yen because it was quite, let's say, on the slower side for its usual standard within this green zone here. So it kind of like woke up for its standards, at least. For a weekly perspective, you can see some wicks here. So there is some struggle to the upside. And on a 4-hour chart, you can see that better. Let's take a look at that struggle. What we're looking now at is that struggle here. All in all, though, it still looks like a correction versus this upside, doesn't it? And there's no divergence. So all in all, it still looks more bullish than anything at this point. So I think positioning oneself for potential long might make sense. But of course, we have the pound news events. I'm not going to do that. Sorry. Not going to do that before it, but depending on how the news goes, taking a long at the L3 and the 61.8, fib at the moment with a stop loss below L4 and targeting H4, I think could be an interesting setup. Now, why the 61.8? Let me put a line at the L3, okay? It's all clear what level that is, because when we go to the 1 hour, we will not see the Camarilla anymore. So the Camarilla is the entry, and it serves as TP and stop loss placement. So the green line is where the Camarilla L3 is, and you can see that there's just a lot of support here. So if price hooks back to that, yeah, the whole idea is just that it will bounce off that support level. That support level, as you can see, comes after a big upside, and we could have a range like that. So that's the idea. Otherwise, I don't think I have much to add to that. Does anyone have a particular comment on this idea? The idea I want to, I just showed you for myself. The only thing that I would want to do is get out of that trade before hitting resistance here. Oh. Because there are two pretty big wicks there. So that's obviously a less desirable element of a long, so got to be careful of that. The longing spot is, let me get rid of this fib, it's towards the low of last week. Actually, we already bounced off the low of last week, as you can see. So we're kind of trying to play that weekly candle. And you see the red line is where the weekly highs are, so yeah, the exit I would recommend before that. Trading it down to that, no, not a particular fan of that because of the fact that there could be a chance that price doesn't get there. If it does get there, I think it's a good L3 long, but there's also a chance that it doesn't even get there. And then, of course, the setup would be missed. So in that regard, I don't like trading against to the downside here because of the fact that the momentum is still too strong. And I wouldn't be a fan of shorting it halfway this zone. Unless price really gets maybe to the daily R2 and a stop here. This resistance zone gets maybe to the H5, and I see some candlestick pattern there. Then it would be different, of course. Then I could look for a reversal trade, but I wouldn't be if price does get to the H5, that long would not be valid anymore because the target has already been hit. As soon as price hits H4, the whole setup is invalidated because the target has been hit already. So either it gets to L3, great, I'll take a long. If it doesn't, and it goes first stage 4, then it's invalidated. If it then goes stage 5, it could be a reversal setup. Trading it now against it is kind of too much in the middle of a 4-hour range. I actually, even of this, if you look at this 30-minute Camarilla, it's kind of like in the middle still. Well, it's closer to H3, but don't get me wrong, H3 could be indeed the turning spot for downside, but I would skip it personally. But if anyone likes it, of course, that's something different. But I would rather not take this one. Let me say it this way. Otherwise, in general, if there's a setup, let's say a long at 61.8 fib that is going with the trend, then I would not always take a reversal trade down to that 61.8 fib because there's a chance price could bounce off the 50 or the 38.2. So my entry would be missed. That's okay. I'd rather have that than trying to trade it down to the fib just because I have entry there. Doesn't mean that it couldn't work though, but I would have to see concrete reversal signals. So I hope that makes sense what I'm trying to explain. Let's see. What else did I have in mind? I was thinking about the dollar CAD I wanted to talk about. Alec is thinking about the odd CAD. So let's first take a look at the CAD, and then we'll take a look at the odd CAD. Dollar CAD. There was nothing very specific, but and the New Zealand specific I wanted to show you, and we could talk about the dollar yen as well. Let's see. First, dollar CAD. First thing I want to show you is this resistance line. So we're having some trouble here on the dollar CAD. Big weekly wick, and last week was bearish. We're now right in front of last week's low. All right, then again, we have this channel to the upside. Alrighty. So basically, we have this channel and a resistance line, and then on the 4-hour, we have this channel. Alrighty. So basically, if you look at it from this perspective, it looks like a bull flag within an uptrend channel, but fighting against a weekly resistance spot. So in that regard, it's going to be interesting. It could be interesting potential at various spots. One of those spots, of course, could be the bottom of this channel and the bottom of that bull flag right here. So if price gets there, that could be an interesting bouncing spot. Or could be an interesting breaking spot as well, obviously. The other interesting scenario would be a break above this blue line for upside, or perhaps even a bounce back down here. So that blue line could provide interesting setups both to the up and downside, both as a bounce or break. So I'll keep an eye on these trend lines and see how price reacts to the resistance and support on these various time frames. That's it. There's nothing I have in mind right now, but it seems just like there could be something going on here that might be worth watching. Odd CAD. It's a difficult one because, I don't know, it's just very slow the last few weeks. all in all, I still like this downside momentum very much, but it just hasn't been moving down ever since that point. It could still happen. We bounce off the 50 fib here. Had another momentum down, then moved up very correctively. So I was expecting after a big candle here, I was expecting follow through, but it didn't happen as yet. So, but I'm still more bearish because, I mean, obviously this was a big break. This is corrective. This was a big engulfing twin. Could be just a retracement for more downside. So looking at this momentum, the candlesticks, the moving averages, the fib, it looks more bearish. In fact, it could be a breakout candle right here. There's a bearish candle. It's kind of a bit awkward candle because it's kind of smallish and it's within a previous doji. So that's maybe not the best breakout candle, but it is fully below and it closed near the low. But because of that smaller size, I would probably want to check different time frames. Here there seems a lot of confluence at the monthly. Well, it looks, I think a retracement up to 98.50, 60, with a stop loss above this top. This one here, I think makes sense. But I have already had a short that didn't go well, so it's not easy because it's so corrective. It's of course always a risk that it doesn't break now, but later. The target would be 96.04, which could give roughly 250 pips target with about a 60, let's see. The loosest stop loss would be about 80 probably. So that's one way of doing it. There's a lot of pivot points. So there's a pretty good chance the price will respect that zone. I mean, there's a lot of confluence there. Yep. Thank you, Alec. That's good to look at that indeed. Let's see. What else did I have on my list? Pound New Zealand. I wanted to quickly talk to you about that because it has fallen a lot. And we talked about it here upon the break of this channel. And I was extra talking about this one because I liked the pullback and fall potential here to the downside. So that looks very good to me. And indeed fell to 202. So, and actually price went a lot further. As we can see, it went down about 800 pips, in fact. Wow, it was a lot more than the 320 that I was planning on. But the point is that now actually it might be a bit of a bouncing spot, I was thinking, because if you put a fib on this whole downside, we're actually at a minus 272 target. So I'm kind of interested in seeing if we can get a bounce for reversal, actually more reversal idea against the momentum, fading the momentum. There is a lot of momentum, don't get me wrong, so it's always a bit dangerous. There is divergence, single divergence between the 1 hour charts here. So let's take a look at the Camarilla now. These levels are quite close to each other. Probably yesterday was a very small day. So that doesn't become that useful. Well, we do see an L5 right at 196.74. So there could be maybe one more smaller push down to that 74 level. Get a double divergence between the bottoms, perhaps. I don't know. It's something that to keep an eye on. It's very close. It doesn't have to bounce now. It could still move down 50 pips and then bounce. I don't see any 4 hour price action that really shows anything at this spot, so I wouldn't do anything now. Either it moves lower and I see some pin bar, or I see a bullish candle perhaps on a 4 hour chart, and we'll look for a small retracement before taking it up. But the target could be a bit difficult on this one because of the strong momentum down. Dollar yen also could be the same as pound yen. In fact, it might be worth a long somewhere around the weekly pivot point, somewhere around L4 if it gets there. But the question is, will it get there? That's difficult to say. It doesn't have to. It could make some kind of flat like that, some kind of consolidation like that. It doesn't have to though. But it doesn't, then it's a bit difficult to get in now. Because it's right in front of resistance. That doesn't seem that appealing. But L3 could be also a bouncing spot. So I'll keep an eye on the dollar yen too. It will depend also on how the pound dollar behaves, which one could be better, the pound yen or the dollar yen upside. Sorry. Let's see, what else did we not discuss yet? Dollar Swissy is the same like basically as the euro dollar, but the other way around. Oh, wrong template. I guess euro yen could be just as bullish, but if you look at the euro pound, let me take a look again. The euro pound had a negative day yesterday, so in that regard, I think I prefer the pound yen upside, because it is every time we went above the 89, it was just a moment of resistance. So for the moment, I would consider the euro pound, if anything, at resistance personally at this spot, unless proven otherwise. Kiwi, oh yeah, Kiwi short last week ended up for more profit on the Aussie, but also missed my TP. Unfortunately, I had it at 78. Price went to 78.22 here, also by 22-ish pips. I entered at 79.20 or 22, and price went to 79.28. So I caught the turning spot with that pending order, and it was moving. It went well, but unfortunately, just missed my TP. Otherwise, it would have been about 100 plus 120 target. But I missed it, unfortunately, and price still went for a higher high. Anyhow, that was last week, but this week, not all too sure. It's right. It's still very close to this resistance. I don't see anything very interesting at this moment. It is close to resistance. It is above the 21 EMA band in the meantime. And in an uptrend, in fact, on the 4 hour. That's the difference with the Aussie. No, sorry, that's the difference with the euro. This is an uptrend channel. So I don't know, it doesn't seem that interesting. Very close to resistance, but in uptrend channel. I think that those were the things that I found the most interesting. I'm just checking if I didn't miss anything. Does anyone else have a pair in mind? Gold is maybe something to discuss still. Gold, if I put a fib on the first swing high, swing low here, the minus 618 could be an interesting level for a bounce. 1205. Keeping an eye on that 1205. I'm not trading, by the way, XAU USD, but I just keep an eye on it for interest sakes, because I just like to keep an eye on a non-forex pair as well, like sometimes also XAG, but mostly XAU. But I'm not trading it myself, by the way. Let's see, CATs, we'll see. I don't think I can open the CATs receipt. No, CATs receipt, I don't have the CATs receipt here, unfortunately. But it was moving up a lot the last time I looked. Last time I remember. But, you know, the Swiss C, I think that one was pretty choppy, if I remember. I don't have it, unfortunately. I cannot go into details to show it, unfortunately. Let's see. What else? Maybe the euro odd. Very choppy. Yeah, not a big fan of it. Pound odd. Big downside after the spike up. That doesn't surprise me. Nah, I don't know. It doesn't seem that appealing to me, but there's a lot of downside, a lot of divergence as well. I don't know. It could be retracement time for the pound odd. It is possible. And in that regard, if we put a fib like this, you know, it could go down to the 61.8 and make an upside like that to the minus 618. But those reversal ideas are always risky. It could, I mean, it could also be just a flag and then like this. So the difference is, do you see an impulse prior to the flag? This is clearly a flag. Here we do have some impulse. That's a small difference. That's why perhaps with the divergence also, of course, as an extra factor, there could be that zigzag potential. And we could see maybe the pound odd zigzagging up to the minus 618, the daily R2, and the weekly pivot point confluence at 180.50, which then again would be a good resistance spot for shorts as a confluence for downside. In fact, that resistance zone is probably more interesting to trade than to the upside, actually. But this one, of course, has the news event too, so who knows? The news event could do like this and move down, maybe not that much, but maybe do like this and go through the L4. That's always difficult. But if nothing wacky happens during the news event, it could be a zigzag. Wouldn't be earth-shocking to see that happen. Let's see, the Swiss yen. looks very bullish. We had a negative bearish day yesterday, but otherwise everything is looking very bullish, very far away from the moving averages. I would be looking at this, it seems natural to look for longs. The minus 272, the minus 618 would be great bouncing spots, but it is probably questionable if price will get that low. Difficult to say at this spot. I really don't, at this point, I would rather wait for a discount, otherwise it's getting a bit, I don't know, it's getting quite extended. Doesn't mean it cannot keep pushing though, but in fact it is already at H3. And perhaps some of you took this break. I don't know. I think still I'd rather wait for L4. The only thing is I don't think price will get there. That's the thing. But if it does, it would be a great long area, and L5 too. But it might be pushing it. However, taking it along here would require it would require still the fact that we have some space to the upside, which we probably do. It's just that no matter what time frame we look at, it has broken some kind of resistance already. And I'd rather take it upon the break than just in the middle of something. So if anything, then the backup plan could be to wait for price to get at least back to the moving averages. Because now it's pretty far from those moving averages. That's why my hesitation. So I'm not sure what you were thinking about, Ilya. What you had in mind. Maybe you want to share with us, I don't know. Or maybe you just didn't have anything in mind yet regarding a trade, but you were just curious. That's possible too. Probably rather wait still. Either get to the L3 or L4 or at least back to the moving averages. Could have been a good breakout trade earlier today though. When I pushed above the moving averages here at the blue dot or pushed above the H3 for instance. Which could still be the same good and could still be the entry actually, or the 1 hour chart here when we have 1 hour candles pushing above it perhaps, but we do have an hourly candle above the daily pivot point in fact. So hook back to that daily pivot point. Probably is a decent balance between getting some discount but not aiming for too much. I mean, this would be the weekly pivot and daily S1 would be great, but will price get there? I don't know. Alrighty. Otherwise, I think I'm looking for a pair that we didn't discuss. It's difficult to find. Odd yen we didn't, but it's kind of the same as the Swiss yen, in fact. Euro New Zealand, perhaps we can take a look at. No, not a big fan of this at the moment. There's divergence on the hourly chart and no clear impulse to the upside. So no, I would not be looking for this one. The EuroCAD looks bearish. Euro dollar looks better though. Pound CAD looks bearish. Close to support, I guess. I don't know. Nothing that special. And I guess that's it. Let's see. Björn is asking whether Renko bars, if that's something I have looked at. And not sure if I understand it. Skip time and have just price action. So I'm not 100% sure what you mean there, Björn, but Renko bars, I did look at them. I used them in the past, but it was already a long time ago. It was like 5 years ago. I was using them for a while, but then went back to looking at candlesticks. I have a template that has Heikinashi. If I can find it here somewhere, I don't know. Maybe it's lower, I don't know. I have it on the other computer though. Not the one I'm showing you here. That's the problem, I think. Ah, that's what you mean. Yes, that's true, Björn, indeed. Renko doesn't use time. Yeah. It uses range of the... Yeah, you have Renko and you have range bars as well. I always get them mixed up. Range is where prices move a certain amount. Probably Renko too, but a bit different, I guess. I looked at both of them. I used both for a while. Yes, the red and the green-blue. Yes, the green-blue and the red. Here, you have actually various moving averages. Let me show you. You got the purple and gold. That's the 89 EMA. Purple is when it's down and gold is when it's up. Then you got the red and green-blue. The green-blue is when it's up, and the red, dark red, is when it's down. That is the 21 EMA. The blue and the dark red is the 21 EMA close, and the other two are high and low. If it's special, well, I like it. I think it's oh, even the indicator. It is a special indicator. If you want it, I can send it to you. Well, I mean, let me say it this way. It's an indicator that you can't find on the standard MT4 platform. All right, just send me an email. All right, anyone. It's not only for Ilya. Anyone who would like it, no problem. I can send it to you. Just send me an email with the topic, and I'll get it to you, okay? Yeah, the best is for you to send it to me, because otherwise it's easier to otherwise I have to copy the addresses now. Well, I guess that wraps it up. Nothing really much to add besides this. So I don't want to hold you up. With regard to tomorrow's webinar, we have Forex strategy. Yeah, no problem, Ilya. Gladly. And Wednesday evening, Nennet is going to take a look at multiple time frame trading, and Thursday, Nennet and I are going to take a look at critical thinking to avoid overtrading. And don't forget to take a look at wave analysis and perhaps the blog. And Nennet has here trade setups that he uses, and wave analysis you will find my wave counts and fundamental and technical analysis. So check it all out. It's being a bit slow at the moment, so it doesn't matter. Hope to see you soon in one of these webinars. Wish you happy hunting and good trading. Cheers.